Welcome to the Fractal Effects live stream. Please make sure you read the disclosure. If you're following along with us today, make sure you do in a demo account, as this is for educational purposes only. This is not financial advice, and we are not financial advisors. Please make sure you check us out on fractaleffects.com, where we teach algorithmic high probability trading. And we'll jump onto the charts in a minute, just waiting for the range to be formed. So we had a little bit of news drop today. So we have FOMC meeting minutes. That's later on in the afternoon. And we have crude oil inventories dropping actually right now. Let's see how that affects the market. So far, no confirmation. And all you have to do now is just take a look at the higher time frame EMAs. Excuse me. You can tell that we're bullish, extremely bullish. We have a green box. We have a downside expansion model. And London had a bullish confirmation retracement back to London's fair value gap and a nice extension to 2 standard deviations. So we have taken out previous day's highs. We're well above the EMAs, above 238. So we have swept Asia highs. Now we want to proceed with caution. So we do have a downside expansion model. Even though we've swept up here, we want to see all the right points of confluence before we take a buy. This is the only thing that's not in accordance with our confluence we would have liked to seen a upside expansion model, Asia under London, but doesn't mean that we can't go higher. We have, once again, taken out previous day's highs. That's usually the liquidity that we run for, either the highs or the lows. So the fact that the highs have been taken, there is a chance that we could run lower to take out the lows. But we just want to wait for confirmation and then see how deep the retracement is and what the market does. Right now we have a lot of fair value gaps. This is the main fair value gap right now of interest. We got the opening gap down here, London's gap down here. We do have a lot of straight lines down here. We know the market hates straight lines. Everything here has already been taken. When we're this bullish, we want to wait until it hits the 20 EMA. And then what kind of reaction we get there. But firstly, we need a confirmation. So we want to see a bullish confirmation, excuse me, and then a retracement back to the 20 EMA. Make sure you check out all the videos in the Learning Hub on the back end of Fractal Effects so you understand the strategy, you understand the indicator. We're only going over a few things. Make sure you line up the data with the aggregate that's in the dashboard and the spotlight dashboard under Fractal Effects. So up here, this is a new added feature for anybody just joining us. We've added this to the indicator. The EMAs are now actually added to the indicator as well. So we know when we're bullish across all time frames. So right now, our daily bias is bullish, 4-hour daily, and even our 1, 5, and 15 minute, the lower time frames, those are bullish as well. So we're on trend. We have a green box waiting for a bullish confirmation. We're primarily bullish. The only thing that doesn't fall in line with our confluence is we have a downside expansion model, and we've taken out previous day's highs. And even though we don't have them labeled on here on this chart, again, when you go over the Learning Hub, all the videos, it shows you how to mark up all these areas of interest, like previous day's high-low. But we're looking at several different charts. There's only 2 right now that I'm sure you guys can see, but we have them marked up on a different chart. So still waiting for confirmation. Remember, we don't make a move until we get that confirmation. Right here, London. We can go over London until then. London, we had a bullish confirmation. A retracement back to London's fair value gap. Deep retracement. And then a full extension of 2 standard deviations. London is one of the better sessions to trade. Less manipulation, obviously. New York, that's where all the news drops, all the manipulation happens. This is just a difficult session to trade for most, depending on what time zone you're in. But I've always preferred the London session. I've actually know more than a few people that have relocated just so they could trade the London session. Still no confirmation. Let's see if we get an early retracement. We actually sometimes prefer these early retracements when we see that our expansion models are not fully matching up. So if we get an early retracement and it just cuts right through and gives us a bearish confirmation, falling in suit with the downside expansion model, it makes our job much, much easier. Take a quick look at oil just to see how that news affected it. That's that candle right there. So I took out the highs. Oil right now, higher time frame biases bearish, 1.515 bearish, red box. More of a nested model. Still no confirmation. I'll jump back to NAS. Still waiting a retracement and still no confirmation. On the EMAs, on the TDI, we are overbought, well above the red line here. And as mentioned before, these early retracements can sometimes save us, as they can just cut right through. But usually an early retracement, and then we get confirmation. It wants to move fast. So when our range models match up, we actually prefer confirmation than retracement. When the models don't match up, we actually wouldn't mind an early retracement to show us if it really wants to stick. And then a confirmation and a quick move. We're still top range. Hopefully that confirmation comes before 11 o'clock. Our goal is to be in a high probability trade 1 hour after this range is formed. We're still bullish across all time frames. Now, some people, when they're trading, they don't always know whether to take a buy or a sell. And we discussed this yesterday as far as counter trend trading. You want to make sure all your points of confluence match up. Right now, we have a green box. We're green across the board. We're just waiting for a bullish confirmation. We're above all the EMAs. The only thing that's not in alignment with our confluence is the range model. But if you were going to take a counter trend trade, then you'd want to see, first of all, your range model be a downside expansion. You'd want to see the 1, the 5, and the 15 red. You'd want to be under the 238 EMA, and the 20 would be under the 50. You'd want a red box and a bearish confirmation. If you have all that, then you have a possible high probability counter trend trade. But right now we have none of that. We're definitely not looking for a sell in any form or fashion. So if we got a bearish confirmation, we actually would not be interested unless 1, 5, and 15 are at least red. We do have a downside expansion model, and then we'd want to get our EMAs under. Until all that happens, the only thing we're looking for is a buy. So that's why we've added this panel. Makes it easier for you guys to match that up. And the only thing that you'd actually have to go in and apply yourself, which we teach you in one of the videos in the Learning Hub, is where all the main areas of interest are, like previous day high, low, and some other key areas of interest that you could be using as a TP and or where the market could be bouncing off of. Still just waiting for confirmation. Let's see if we get an early retracement first. Slowly pushing down. Right now, the only fair value gap, and we do have a small one right here. Sometimes you got to zoom in to find them, even though the indicator does paint them out for you. They can be as tiny as this one right here. That's the closest one to the 20. What you want to do is you want to line that up. You want to find a fair value gap of interest. Right now, that's the fair value gap of interest. The 20 EMA on its own is not as important to us as the zone that's around it. And again, it is near 61%. Sorry, 1 second. closer to 50% actually. So if it dips down here, taps our 20, closes above, or even goes a little bit under 50 and closes above, that could mean that it's going to push up, but right now we have no confirmation. So it could just keep driving through, or once we get that rejection, then it could move fast after this. But remember, we don't make a move until we get that confirmation. Slowly I'm making our way down there. About 10 minutes till 11. So right now we're getting rejection off this fair value gap here. We got to see if it's going to stick. We get that confirmation first. Pulling the 20 along with it. Or if it wants to just come down, tap that right now. Which looks like it could be the case. So now again, if we get reaction off of this, we get that confirmation, then most likely the 20 will come back into this fair value gap. And then after confirmation, we might meet it over here, or there might be a new fair value gap that is created. But right now, until it hits the 20, we're not even interested. And we still have no confirmation on either side. And this is what protects our position. If nothing else, this indicator is designed to protect your capital first and foremost. It helps you make a well-informed decision. A high probability trade setup is what it helps you find. Then second, we focus on actually making money. But capital preservation, that should be always, always the first thing that you think about. And at the beginning, you're really just looking for one trade a week. So you have 5 days, some even trade on Saturdays, 6 days, to find one good trade setup. And you're only looking for 1 hour. Okay, so we're getting some gesticulation happening in this fair value gap. Meanwhile, the 20 EMA has entered that small little fair value gap. Slowly pushing down. We got 1 minute till this candle close. Getting a pretty big wick down. Still making its way down there. Just a waiting game. So we're still looking for an early retracement or a confirmation, neither of which has happened. I don't consider this an early retracement until it hits the 20. And again, we go over the concepts in the Learning Hub. And if this takes off without us, it takes off without us. Yesterday, it didn't come back and tap the 20 until much later, at which point we were actually out of the markets. So again, if it takes off, it takes off, but we still haven't gotten confirmation. So we're somewhere in between a confirmation and an early retracement. neither of which I'm satisfied with right now. Looks like we could get a confirmation on this candle. Let's see. Let's see if this confirmation sticks. 24 seconds. Okay, so we have our bullish confirmation. I still want to see it hit this 20. So it might come all the way back down, take out these lows, hit this 20, or at least meet us somewhere here. Unless it gesticulates, pulls the 20 into this fair value gap. So now this has become the fair value gap of interest. It's still under our dealing range. Here's the top of the dealing range with this gray line. So once we get confirmation, there's a high probability that we will retrace back into the range. Now we just need the 20 to meet us over here. Has it yet to touch the 20? It's the last point of confluence we're waiting for. So even though this fair value gap's been filled, we're going to leave it just to see where the market is at once we retrace into it. We're at 11:02. Still just patiently waiting. Maybe you had to touch that 20 EMA. That's where I want to see it retrace to. Here's our one standard deviation. So these standard deviations are dynamic. They pop up on the chart as soon as we get confirmation to whichever side. So we're close to 0.5 standard deviations already. One is kind of the area where we want to aim for. Could go higher, but that's where we would safeguard our position, move our stop losses to break even. But again, that's once we get a clean, high probability entry. Right now, this market is too bullish to catch. I want it to come back to the 20 EMA. See what kind of setup it gives us here. So 8 seconds left. I'm going to leave this fair value gap open. See what kind of retracement we get. EMA is now inside this fair value gap, one where the market took off from, to get our confirmation. We want to see a retracement back to it, either here or here, depending on where the 20 is sitting. It's going to decrease the size of this. As the range moves up, it also moves up our fib levels. Still extremely bullish. We're at 1107. We want to stay under 0.5 standard deviations. We want to see that retracement back into this zone. And we want to see a clean setup. Market's still driving. So we're stalled up here. And we saw something similar yesterday where we paused right at 0.5 standard deviation. It stayed there. Hopefully that's not the case today. We do want to see a proper pullback into the range now. The longer this gesticulates, the more time it gives the 20 EMA to come into the fair value gap. But we want to make sure that we're in a high probability trade setup in the next 20 minutes. But this is now the key area of interest. We want to see it tap, touch the 20, and then we'll look for, like I said, a high probability trade setup to go long. But essentially that's what we want to create for somebody, is the easiest method, color by numbers, green, 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 and then you just add in the knowledge. But this is set up to safeguard your position. Capital preservation. Now this was a rare case. Usually you don't see a retracement that doesn't tap the 20. So this is somewhere in between a early retracement and a proper retracement after confirmation. If it had touched the 20, then we knew that it was going to move fast. We'd probably be following fair value gaps. Now this has become a breakaway gap, and now this is a fair value gap that the market could take off from, but it never touched our 20. And that's what we want to see. Back at 0.5 standard deviation. Now if this thing just keeps pushing and we hit 1 standard deviation, then we are done. But no fair value has been delivered here. 20 EMA has not been tapped. We're not interested as of yet. And the other reason we wait for these key areas to be tapped is right now, the market just keeps pushing up and up. It doesn't really want you to get in. It could just tap 1 standard deviation and drop. We're at 11:15. Still no retracement. Not anything that we'd be satisfied with. Still under 0.5 standard deviations. Now our 20 EMA slowly making its way to this fair value gap. That's where I'd like to see the retracement, tap, and then aim for 1 standard deviation. That'll at least give us enough room to grow. That'll give us our 1 to 3 most likely. Just a little under actually. That would be a high probability trade setup. But again, we have to see the retracement, the gesticulation. If it bounces off of the top range here or this fair value gap and it keeps going, there's not enough room there for us to get our 1 to 3. Our stop loss would still be down here, but our entry would then be up here. We'd have to go all the way to 1.5 standard deviations. About 12 minutes left. Let's see if we can't find that setup. We want to see it come down to this fair value gap. Meet our 20 EMA. I'm going to get rid of this one. Again, we're bullish across the board. We just want to see it come back to this 20. That's where magic happens. Still at 0.5 standard deviations. Still too bullish to catch. Nine minutes left. I'm hoping we can get this retracement. Now we're sitting in the fair value gap. Midpoint is the area of interest. We have the top of the dealing range here in the gray line. So all the points of confluence would be here, the 20 EMA. I'd like to see a tap in this zone. Let's see if that happens in the next 9 minutes. About 3 minutes left on this candle close. We're still at or around 5 standard deviations. So there is still juice to be squeezed. But we got to get a good entry, otherwise it doesn't matter. We're not going for big long runs either. Literally this 1 to 3, at times it can be filled in 10-15 minutes on a clean day. Now we're still slowly starting to get a little bit of pullback here. Let's see if we can get all the way down here. And then once fair value has been delivered, we want to see it take off. Still just bouncing off of 0.5 standard deviations. About 5 minutes left. Hoping it gets down here, but again, this could be similar to yesterday. They just pause the market here, and then they drop it much lower, down to 61%, before taking it back up. Still just at 0.5 standard deviation. 4 minutes left. Our 20 EMA now fully inside the fair value gap, pretty much at consequence encroachment midpoint. But the longer it takes, the lower the probability. Still just frozen there. About 1 minute left in this candle. So this is what we don't like to see. The longer it takes and gesticulates here, it could just drop all the way down to 61%, or even down to the NYC gap right here in red, or it could just do a full reversal. We never touched the 20. Came in, pushed out. So I might want to just reverse from here. We have 20 seconds left in this candle. And even though the fair value, or the 20 EMA is now within the fair value gap, the fact that it took this long and it's doing it after 11:30, our probabilities decrease. With the fractal effects system, the spotlight dashboard, the spotlight indicator, it's all designed to give you the highest possible probability, like highest probable trade setup. 70% or higher. That's the kind of probabilities we're looking at. Anything lower than that, and you're gambling. That's why we stick to our rules. If we're not in a trade by 11:30, even if this market now comes down here, taps this, and does go, not interested. We're at 11:30. We should have been in a trade. Ideally, we would have liked to see confirmation here, a retracement to 20, and then a shootout to the 1 standard deviation. That's what's called a clean. That's called clean price action. Anything like this choppiness, this is all manipulation. So please make sure you check us out on fractaleffects.com. Please hit the subscribe button, turn on your notifications so you know when we're live. We'll be on again tomorrow. And this thing looks like it might just be pushing all the way to 1, or it's going to gesticulate here and then drop most likely down to 61, if not lower. But this is why the system is set up this way, so we don't waste our time just watching this. So thanks again for joining us, and we'll see you tomorrow. Have a good rest.